Okay, VFV.to for anyone looking it up. You put 10% of your allocation to this. That comes out to about $100,000. And that would pay you out $1,139 a month. Oh, no, a year at 2.8% of your overall dividend payout. So this is for retirement. Why are you holding on to VFV in retirement?
Yeah, this is an interesting conversation because it kind of clashes with my own personal opinions because I was trying to framework a portfolio that would help people think and give them a guideline to be like, maybe this could work for me in some sense, and trying to find and look at total returns over just dividend income because I really hate a lot of the fallacy. Because even in the comments on that video, you'll notice people say, oh, what about this? It pays 9%. But then when you look at the total return since inception, it's well below 9%. So you're not really getting that 9% dividend. You're actually getting a lot less than that over the longer period of time. But VFV, again, it really depends on your own personal understanding of like how you want to collect income. Because I'm a US guy, I like US dollars. I don't like converting the currency, but here in Canada, a lot of people prefer to just hold a Canadian held Canadian dollar asset, whereas I'd rather hold the US dollar asset and keep it in a US dollar account. But I figure, and same with my parents, because my parents, they don't want to deal with US dollars. They just want to get some good exposure. And I said, you need to focus on growth to some extent. And they retired in 2023, and we made VFV about a similar size position, and it worked out incredibly for them. Like it, because it since the end of 2023, it's gone up pretty substantially. My mom was able to pull some capital gains and buy a car, and the return rate was so much higher than a lot of the other dividend stocks that they were holding. But since that time period, the markets have done generally well. But I don't know, VFV's, I guess it just depends on your personal circumstance. But I'd still like it, I think, for Canadians.
Yeah, let's talk about that a little bit. I've been thinking about this a bit in my retirement. First, my original thing was when I retire, I'm just gonna go balls to the wall. Everything's gonna be high yield. I'm just gonna crank out monthly income. But I'm like, wait a second, I'm not gonna die when I'm 75. Like, why am I just burning the candle at both ends for 10 years and just trying to get income? Like, maybe I should still think about growth to some aspect. I do want to live until I'm 95. I want to keep living. Your parents probably want to continue to live. So I think having for me looking at it, I go, okay, great. You have a foundational, a growth foundation there. You know, VFV will be fine. You could always convert it later into something that's high yield, even further down the line. And you said your parents pulled out capital from it and bought a car. So I'm probably one of the years it got like a 20% return or something like that, right?
Yeah, I think it's important to framework too that like that portfolio design was similar to what I told my parents, which is like you don't want to manage the portfolio that much. So you want kind of everlasting stocks where you can just kind of collect the yield, don't sell the shares. But, to an extent, like you don't want to give up on any of that upside either, because in periods when the market's doing exceptionally well, those rate of returns are going to be substantially higher. And yeah, you might have a 1 or 2, 3 year dull period, but again, keep an emergency fund, cash aside, make sure your cash flow is enough to cover your expenses, your living, some of your luxuries. But, it's nice having that bit of bleed room to look at more growth oriented investments, because I still think when you look at a lot of what people are running into with option ETFs, a lot of this stuff, it doesn't have a long track record. A lot of these high yielding option ETFs come with exceptional expense ratios. And when you look at the total returns, it is insanely hard to beat. I think right now, what is the since inception return of VOO? It's been like 14%. I'm like, you're going to find it hard to beat that, especially considering people are saying, oh, it's overvalued. It's this, it's that. I would argue that a lot of the traditional companies right now are getting kind of overvalued when you look here in Canada, especially. Our markets have been on fire. But when you look at the US, they're still going through, and again, I'm not just saying the US, I look at companies agnostic to borders. I don't care about politics. I don't care about the dollar conversion. I just care about where my money's going to get the best rate of return. And you have to admit that the US tech companies are still incredibly resilient. We're still going through a massive AI transition, a margin expansion period. And things are still the best trade you could have made in the last 15 years was upper weight tech and then broadly diversify. You crushed. I mean, that's how, my wife and I became millionaires. Like, I mean, it's been the trade that continues to be the best, but I'll pass that back to you.
I got a couple questions. First, for anyone retired watching right now, are your parents living off of the portfolio that they have and probably like a pension? Is that what they
Yeah.
have for retirement? So it is working really well for them. And they're living, and part of the dividends they're living off of are from VFE. They're not, are they reinvesting any of it?
So when it comes to they're not reinvesting anything now, like they're at the stage where like for the first year of their retirement, they're like, let's just get it set up. Let's spend the next 3 to 4 months cost averaging because we just want to get it aggressively in the market. And it was a great time to do it. We got very lucky with the timing of that because I think it was around the bottom of October. And she also diversified. Obviously, we'll talk about some of the other investments, but VFV is not a dividend play for them. To me, it's just purely a
Yeah.
growth play. And I literally said it when I told my mom, and she didn't want to buy it. She's like, I just want income. But I just said, trust me, when this does well, you're going to appreciate that you have it because there's nothing wrong with selling it for a trip or something and pulling 4 or 5% out of it. And sure enough, over a year and a half later, she's like, I need to get another car. I need to pull 20 grand off this. And it was all profit. And she still had way more capital gains beyond the 20 she even pulled out to buy a car for part of the payment or whatever.
I like that. I'll be honest. I like it. I just there's something and there's some peace of mind knowing you have VFV just sitting there to get that growth whenever there's massive growth. Being like that's great. You're not just burning through. You're not subject to NAV erosion, all those other different problems you have when you have something that has high yield.